We could do with one of those little creatures to predict what's going to happen in Greece over, of course, the details of their proposals from the Greek Finance Ministry about the country's debts. The Finance Minister dropping calls for its debts to be written off. What exactly is he suggesting, though, Stephen, with business?
There are two main elements involved in Yanis Varoufakis' plan as he outlined it to the Financial Times. The first is in regard to the biggest chunk of Greece's debt, and that's the debt that's held by other Eurozone countries and by the Eurozone bailout fund. Now, he wants that debt transformed into what he's described as growth-linked bonds. Simply put, that means that the interest and, as a result, the repayments will be linked to how well the Greek economy is doing and how much it's growing by. Greece already has some of these sort of bonds since its second bailout back in 2012, so it's not a completely new idea but would be used on a much wider scale than it is currently. It means, though, that repayments would be much less than traditional bonds, at least for now. The second element contains the debt that's held by the European Central Bank. That's a much smaller proportion of debt, around 27 billion euros estimated by Bloomberg. Yanis Varoufakis wants that to be replaced by what is described as perpetual bonds. That means that Greece would continue to pay interest on those loans, but the principal sum, the main amount they actually borrowed, would never be paid back.
Give us your thoughts then, Stephen. Does it sound like a reasonable plan?
It's an ambitious plan. There's a couple of, I suppose, positive elements to take out of it from the international finance community's point of view. One is, of course, they dropped this plan for a haircut on private debt. That was what Yanis Varoufakis told the bankers and other private investors that he met in London yesterday. The other part is that it doesn't touch the IMF debt. We know the IMF doesn't negotiate on restructuring its debts. Trying to negotiate that would be particularly unlikely for the Greeks. It's also not a straight debt haircut. They're not proposing paying back less than they had originally borrowed, so that'll make things a little bit more politically palatable in countries like Germany. Growth-linked bonds, not a bad idea. It does see that money being paid back, as I said, but it means that a lot of those Eurozone countries that contributed to Greece's bailout would have to wait a lot longer and would make less money on that money that they lent. That could be politically unpalatable in many countries. There's also a question of how much Greece could actually benefit in the short term from changing its debt from how it is currently to these growth-linked bonds. That's because the debt that's held by the Eurozone bailout fund, the EFSF, won't be due to be paid back until 2023 at the earliest. That means there's already somewhat of a window for Greece to deal with this debt. The interest rates on that are already very low, so it's unclear in the short term anyway how they would benefit from that. The ECB side of it, again, pretty tricky. It's not entirely clear that it would be legal under European law to do that, or whether or not it would amount to monetary financing, which is what the ECB is banned from doing. So plenty of details to be sorted out. We know the Greek government is hoping to have a full plan in place by the end of February. We'll have to wait and see what exactly is contained in that plan.
Incredibly complicated if you're not a business expert, but beautifully explained as ever, of course. Thanks, Stephen. Now let's turn to the oil industry next. Results from one of the big players. This is BP.
Yeah, that's right. Just in the past few minutes, the company's reported losses of $969 million for the last 3 months of last year. It says capital spending will be around $3 billion less in 2015 than it was last year. That was an important figure that we've been watching for. Oil prices have fallen, of course, by more than 50% since June of last year. BP, just the latest company to announce that they're cutting spending as a result.
Let's have a look at the markets next, shall we?
The Asian markets had seen a little bit of a lift at the start of the session on the basis of some optimism from what was happening in Greece. That's worn off, though, largely in trading in Greece by now. The Nikkei closed down 1.2%, the Hang Seng just around the flat line. Shanghai doing well, but as always, Shanghai tends to do its own things in these situations. We're also checking in on the markets in Australia. The Sydney ASX 200, that's up about 1.5%. This in the wake of an interest rate cut by Australia's central bank. It sent the value of the Australian dollar falling too. Let's move on now to look at some of the day's other business stories. And the world's biggest PC maker, Lenovo, has reported better than expected profit figures for the third quarter. That's despite buying Motorola for over $2.9 billion as the company tries to diversify into the mobile market. Profits actually fell by 5%, but the company still earned more than $250 million. The American electronics retailer Radio Shack is to have its shares delisted from the New York Stock Exchange. The market operator announced the move as the company failed to address its financial problems. Radio Shack warned last year it may file for bankruptcy protection. Its shares closed at 24 cents on Monday. That's down 13%. And Google could be set to launch a rival to the car-hailing app Uber. Bloomberg reporting that the project could be linked to the internet giant's development of driverless cars. Google has invested more than $250 million in Uber.
And finally, we're talking black markets now. Developing in Italy, this one, in fact, for an unexpected product.
Yeah, the Guardian newspaper reporting that there's a shortage of pine nuts, creating somewhat of a crime wave in Italy. They have the story of thieves stealing €400,000 worth of the nuts in the north of Italy last December, and arrests of other people who were carrying illicit hauls of pine nuts. They're in short supply because of disease and bad weather. Prices for pine nuts have soared to €47 a kilo. The nuts, of course, a key ingredient in that Italian delicacy pesto. Apparently sellers are now having to keep their deliveries secret in Italy to avoid any further thefts.
I love pine nuts. Good taste. There was a fantastic screen grab just a second ago. Stephen Carroll, and underneath it says totally nuts.
It's perfectly planned, as you can imagine.
Exactly. He wrote it as well. That's the worst thing. Stephen Business, thanks a lot.